then the quarter with Rajendra Pawar, Chairman and co-founder of the NIIT Group. Mr. Pawar, thank you for joining in on ET now. It was a decent quarter, like I said, with good growth on both the parameters, top line and bottom line. But besides Corporate Learning Group, what were the key growth drivers for the company?
Let me talk about the year, because this is an annual result as well. So the revenue at 910 is up 7%. The operating profit at 84 crores is up 13%, and the margin is up 48 basis points at 9%. And of course the profit after tax is a significant increase of 38% at 86.4. Now these are the main financials of the company overall. Now within that, as you know, the Corporate Learning Group now is the large part, is almost touching 70% of our business, and that grew 22%, and there it has an op margin of 14%, so that's had a very strong growth. And also I think what's important is that the visibility for us is $245 million, which is up 12% year over year, and that's a good lead indicator. And within that, of course, we've had a large number of new clients. And the corporate business, the main model there is what we call as MTS, which is Managed Training Service. And we now have 46 customers, blue chip customers globally, on managed training services. So all in all, I think it's good traction. It's been a very good year for us, and so the financials are showing that up quite nicely.
Good morning, Mr. Pawar. This is Cheryl also joining in. So how have been the trends in your domestic business? Also, what are the new transformative initiatives that are being taken to improve the profitability in your domestic business?
Well, it's not a slowing down. In fact, the India business, retail business, which is a much smaller percentage, has improved its profitability. Our thrust there has been on profitability, so it's got a positive margin after a while. And in that, as you know, there is the shift that we are doing into new technology space, into new ways of teaching. In fact, the most important thing happening on the India business in our India corporate as well as learning business is that we have now got a very good grip on a new methodology that we call stack route. So stack route basically looks at the new stacks of technology. So again, the old model where you were teaching people one tool at a time, the stack route basically says that today's developer has to know a whole stack of routes, right from what will be at the front.
Okay, Mr. Pawar, I just want to move on and talk to you about your key growth driver, and that's corporate learning growth. There's a visibility of $245 million over there. So what kind of, deal conversions, executive run rate we can see, given the focus now moving to Fortune 100 clients?
So, we don't give future-oriented guidance, but I can only tell you that the lead indicator for you is the business over the next 12 months. It's 245 million. That's a very solid 12% growth number. But I think more importantly, you have to realize that training or talent development is a highly fragmented business. It's a massive business, very highly fragmented, and we are in the top 10 in the world. So there, our aspiration is for global leadership. And there's a lot of headroom, and there's a lot of opportunity to actually structure and restructure the market. So our MTS, which was a new proposition a few years ago, is beginning to get traction. And basically, you go into a company and tell them, you do a lot of training, it's largely unmanaged, and we put it into a managed method. And it's in a sense about learning outsourcing as a process. So there's a lot of headroom. We are creating that market. We are putting new ideas for these Fortune 100 customers, and that's why we think we're getting traction. So I think it's going to be limited by our ability to procure new business, and so much of the investment that's going in is to strengthen the front-end capability of being able to consult for the large clients and then to procure and structure those contracts and procure the business. So we see good headroom, and I think we are really preparing ourselves to serve that very demanding set of customers and the blue chip customers we have.
Mr. Pawar, can you also tell us what's the plan for a special dividend plan of about 2,200 crore rupees that you've received from the divestment of stake of NIIT Tech, and also the utilization roadmap of the remaining amount of your own growth?
Given the improving performance of the company and this very significant liquidity event, the board has announced a dividend of 5 rupees on a 2 rupee share. That means a 250% dividend. And then it's the first decision. The second decision is the board has set up a committee to now study in depth the ways in which we will utilize the proceeds, because as you know, this 2020 crores, we have to look at the transaction cost, we have to look at the tax that has to be paid, we have to deal with our debt, clear our debts, and then we are keeping some contingency for the duration of this.
Okay, Mr. Pawar, thank you for joining in and sharing with us what exactly went by in the fourth quarter for NIIT Limited.